Hello and welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and I'm joined by always my co-host Nick Ponte. How are you, Nick?
Yes, brilliant, raring to go.
Good,
uh,
mate. So this week we're going to chat about the frustrations of a challenging market, and right now we find ourselves in one of those challenging markets. At the moment, there's little stock coming to the market, and there's plenty of demand for it. So this is really driving prices hot. Closing dates very quickly, and and property is going for 20, 30. I think we've heard almost 40% over the actual home report value, haven't we?
you hear some crazy stories. Like I've been speaking to solicitors, mortgage brokers, and that at the West End of Glasgow. Jordan Hill, people paying like 100 grand over the home report value and stuff like that. So, yeah, absolutely mental. And I guess
Insane. And this causes a lot of challenge, and obviously a lot of challenges for us as investors trying to find properties, because we're competing with a shortage of stock and a high demand. So I think we thought it was quite important to have this podcast and chat about the importance of frustrations in a challenging market, but also why it's important to stick to your investment criteria. Because if you're starting out as a property investor, you have goals and aspirations from your property portfolio on what resources you have and how you want to perform. If you start becoming this motivated buyer and start overpaying like everyone else is at the moment, then you're not going to be able to reach your targets. You're not going to be able to reach your goals, because you'll either tie up too much money in the deal, won't be able to recycle your money back out. And this could kind of cut your investment portfolio very short, very quickly if you fall in this trap. Isn't that right?
Yeah, I mean, I guess obviously it depends on your strategy, but certainly if you're somebody who has got a kind of starting out and you really want to build that portfolio and you want to make that money work for you, and you're going to be wanting to try and buy at a discount, add the value, then refinance, and let's face it, that is the best way to build your portfolio. Then you're definitely going to be struggling at the moment, because you're competing against a lot of first-time buyers, homeowners that are not looking to secure it at a discount or try and tie in some profit. They're quite happy to pay well above and beyond the home report value. You're also competing against a lot of I'm not going to say amateurs, because that's a bit derogatory, but do you know what I mean? People that are not really kind of educated enough to know that they haven't done their numbers properly, and they're getting caught up in the hype just because it's almost like this winner's curse kind of scenario they talk about in the 18-year property cycle, where everything gets super highly inflated, everybody gets so caught up in the hype, and then people are just they're not thinking logically, and they're not looking and analysing the deals properly, and they're just getting carried away.
No, absolutely, mate. I totally agree with it. I've actually mentioned this to my wife a few times recently about selling our own home, and she said, "Well, but you're falling into the trap of overpaying for something else." But I'm saying, no, I wouldn't buy nothing. I would either buy it, move into one of the properties in the portfolio, or rent somewhere for a couple of years and let the market cool back off. But like you say, if you can analyze it right and capitalize on the market, then you could do well at it. But unfortunately, we're finding that most as investors are all buying, and like you said, it's very easy to get caught up in the trap. And we wanted to touch on this on your case study a little bit, Nick, because you've done phenomenally well this last year, even though you felt frustrated, and you've shared this throughout the podcast, throughout the year, saying that how frustrated you are, and you've not purchased nothing, and you've not met your targets and your goals. You stuck to your guns, and you've kind of kept your criteria really tight. You know exactly what you want. You know exactly what you're looking for. And you've stuck to it, and you've now got a deal across the line. So it'd be good to touch on that at some point later on this episode.
Yay, I got a deal finally. I was waiting for about a year, and eventually I've got a deal. Yeah. No, we can touch on that later on, but should we look at why? Why are we experiencing this? Obviously, COVID, I think, has had quite a big influence, and the lockdown obviously has reduced that supply of properties coming to the market, which has obviously caused a huge issue, because we've still got the demand. So if we break it down to fundamentals of how the property market functions, we're talking about a supply and demand driven market. So if people are not forthcoming with wanting to sell their flats and their houses, and you still have loads of people that have got loads of money sitting there, because the money just didn't disappear overnight. People still had cash. I had cash sitting in my bank, do you know what I mean, before the pandemic. So I've still got that cash. Managed to get a deal now, But, there's still so many people looking. We haven't had the problems of a shortage of mortgage lending and credit. In fact, that's been bolstered and boosted by the new government-backed 95% mortgages as well.
I also heard something the other day, which was quite an interesting point. Apparently, because the courts have got a huge backlog in their stock for executor properties of people passing away and selling off the estate. That might be small cottages or smaller bungalows or something. And basically, someone was saying that was stalling the market because the people that are downsizing from a 4 or 5 bed house downsize these little cottages that are coming on from executors. That's not freeing up their stock, which allows maybe the people that are climbing the ladder from 1 or 2 bed flats or 3 bed semi-detached houses up into bigger houses. It's apparently kind of stalling the whole chain because the courts have got this huge backlog as well. I don't know if that's something you've heard of.
I've not heard that one, but it's really interesting. I'll tell you another one that I heard recently was that, these asset management companies that do all the repossessions, well, they pretty much stopped. So they can't repossess at the moment. So I know it's not a huge market, but it certainly affects the likes of us investors who, remember, used to get quite excited when you used to look on Rightmove and used to see the over the toilet seat, the tape. What is it? Do not touch.
Do not use in the across the gas meter and across the electric meter. Yeah.
Whenever I seen those photos, I was like, brilliant, there's a deal. It's a repossession. Excellent. Jump on it. Well, I've not seen one of them for about, I don't know, a year. Do you know what I mean?
That's a really good point. I'm kind of laughing at you saying that because people do mention that quite a bit. Like, how the hell do you spot repossessions? And it's like, I've not seen one in for a while, but yeah, that's the exact telltale. Sold as seen in the tape over the toilet and stuff like that, so no one can use the facilities.
Aye, so things like that have not been coming on as well. So there definitely is this huge problem. And I mean, even if just in my own search, I've got it on my Rightmove search, set location Glasgow plus 10 miles, right? And used to get about, I don't know, 60 to 70 new alerts a day, coming on. I get it once each day, and it tells you the number of properties that have come on. And, recently it's been 20 to 30 properties coming on in Glasgow, and it used to be 60 to 70. Do you know what I mean? A day. It used to be the volume is just not there. So
like you say, that's completely stalling it. There's no movement in the market. There's no people going up, people downsizing. There's just a bit of stalling, but people are still looking. How do you think this is going to pan out since lockdown's starting to ease? Do you see it still being a bit of a slow burner? Because the things that we've just mentioned there with asset management companies repossessing properties and the court proceedings, that's going to take a fair 6 months to the end of the year probably before they get through all this backlog.
Yeah, it's obviously that's going to take a while, but that's quite a small market. Bearing in mind, you've got to think the kind of, the general, the kind of.
But does that not stimulate the market though? Is that not a part of what stimulates the market?
What the repossessions coming back on
for
sale and stuff like that? Well, it does contribute a little bit to it, but I mean that's going to be quite a small. I don't know figures wise, what percentage of the market like that would be, but I think that is pretty small. For me, it is the general kind of sentiment of the general public and what people are perceiving, and a lot of people still are thinking that there's no point in selling the property because they think, well, we've still got all these restrictions. And, maybe they're maybe thinking, right, maybe by May, June, once we get kind of, 80%, 90% of the vaccine rolled out and stuff like that, then that's when they'll think about moving. Do you know what I mean? Because it's going to be a lot easier because people don't really know that the property market's still open. We all know because we're in it. Do you know what I mean? Estate agents know, solicitors know, property investors know, but general public, Joe Blogs probably thinks, what's the point in putting my house in the market? I'm not going to get the best price for it yet.
Absolutely, mate. No, that's absolutely right. People don't, and people might be a bit intimidated by we're in lockdown. I'm going to have people traipsing around my house when we're not going to be indoors or social distancing and stuff like that. So there is a bit of a taboo around it. So yeah, you might be right. The maybe general public don't realise that the market is open and very, very buoyant.
So they talk about that a lot, and they talk about obviously the government stuff like that, which we've gone on about quite a bit in the past few episodes with guys like Adam Lawrence and stuff. But, in Scotland, I don't think that really is a huge factor. The kind of the stamp duty holiday, LBTT, well, that's over now, right? So, the argument in England was that as soon as the stamp duty holiday finishes, the market's going to drop off a cliff. Do you know what I mean? people are going to be scooping up deals left, right, and centre because things are going to have fallen through and all the rest of it. Right, our stamp duty holiday ended on the 31st of March. We're back to normal already for 2 weeks. I don't see any slowdown at all.
No
Slowdown. So I would say the effect of our stamp duty holidays not really had too much impact on the market. People have saved £1,000 here or there, but it's certainly not driven things, that's for sure.
So yeah, so let me touch on kind of how we've tweaked, because obviously we've been in this market for this up and down market for almost a year, through COVID and lockdown, and you know that I've kind of expanded my kind of goldmine area. Like you just said, you touched on Glasgow and a 10-mile radius. Mine just went flipping the whole of Scotland, and ended up buying something in Ayrshire a few weeks ago. Just whenever the deals worked, I kind of went to it because I've still got my target. I was still meeting it, and you know, a lot of the stuff's been up in Aberdeen, and obviously as far as Ayrshire. But you've stuck kind of strategically, which I think is brilliant, strategically to your area, what you're looking for, within the kind of the same area. So that was an extremely hot market, and you couldn't find anything. So how did you come across this this deal you've just picked up? Then I think the listeners would take a lot of value in hearing the story and knowing that they are out there and you can still get them.
Well, I tell you what I was really struggling with, and I actually got quite depressed about this because, you know, I'm watching social media, I'm watching Instagram, I'm watching the likes of yourself, you know, scooping up deals left, right, and centre, below market value, here, there, and everywhere. Ayrshire, Aberdeen, all over the place.
Podcast every week.
Aye. And I'm thinking to myself, fuck, what am I doing wrong here? Do you know what I mean? And I was like, well, wait a minute. There's quite a lot of factors, right? The last property that I purchased was back in February 2020, just before the pandemic hit and all the rest of it. And as we talked about in our goals episode, I had, you know, if you listen back, had goals to scale up to 20 properties within the next like 4 years. I'm currently at, well, it'll be 10 now. So I've got a wee bit of work to do. But, you know, I just basically stalled. First of all, when it first hit, I was like, shit, this is really bad. This is going to be like 2008 all over again, you know? And then it kind of like
You pulled out in that deal, didn't you? Right at lockdown.
Yeah. So like I had, so it was say March, we're up to March, 3 months into the year. And I'd bought already, purchased and completed on one flat, which was the one in Middleton Street in Govan. And I'd already went on to buy another one, and it was a great deal as well. And looking back on it, I'm like, ah, shit, man, I should have kept that because it still would have been a good deal. And it's probably gone up a 10 grand since. Do you know what I mean? If I'd kept a hold of it. And actually, I did see it back on the market. I think no, it wasn't that one. So somebody bought it and then put it on the rental market, and I saw it all done up. Somebody had done it up really nicely, and they got a really good rent for it. So I was really gutted about that. And yeah, when the pandemic hit, basically in March, I was like, I'm pulling out of this. I foresee a total crash, and I think most people did, to be fair. And then it wasn't really till, you know, kind of like tail end of the year, things started looking like, you know, we weren't going to get that. And then, you know, after the first lockdown opened up, the market was roaring. And then I was like, shit, I've wasted all that time. I haven't purchased that property. And do you know what? It's not going to crash. But I was then focused on other things, you know, life takes over. You know, we've got 3 kids. So all my time was focused on that. I wasn't having time to go out and do viewings. I was also running my business, my lettings agency business, single-handedly. I tried to take on somebody in September. That didn't work out. So again, I was back at square one, back operating that myself. And to be fair, my main focus was on that. You know, I used to look at Rightmove every day, maybe out and about doing about 5 or 6 viewings a week. Pretty much all that stopped. So I'm not trying to make too much excuses, because at the end of the day, I know there was people still doing stuff, but there was a lot of factors at play there, let's face it. So bring ourselves on, right? I'd pretty much sort of just take my foot off the gas, bring ourselves on to, I think it was about maybe four weeks ago or something like that. I was still keeping an eye. Every couple of days I would check Rightmove. Every sort of week or so I would go out and do a couple of viewings. I would put a few offers in. Everything was going crazy over the home report. I wasn't getting anywhere. And I was like, do you know what? I'm not going to get panicked here. I've set my goal, but see if I don't achieve my goal, it's not the end of the world. I've got money here. I'm ready to, you know, although it's not doing anything in the bank, I'm ready to go when something comes my way. And just out of the blue, I got a text message from a friend. And he's like, I've got a pal of mine. It's actually a friend of his mum's. She's trying to sell a flat in Glasgow, in the south side of Glasgow, a decent area, Cathcart, 1 bedroom tenement flat. She had it on with an agent. She sold it for above and beyond the home report value, like everything was selling. So, home report value was £80,000 for a 1 bedroom tenement flat. She actually sold it within a couple of days to somebody for, well, I think it went to a closing date actually. So probably sold it in a week at £86,000, right?
Mhm.
The guy pulled out, couldn't get the finance, so the mortgage fell through. She had already purchased another house. So she was in a situation where she really wanted to sell. She had owned the property for about 20 years, right? So she's obviously got a bit of equity tied in. So she had gone to my friend who's a property investor as well and said, look, do you want to buy this? Do you want to buy my flat? But because he was actually quite close to the family, he didn't want to get involved. Do you know what I mean? Sometimes when you're like close family or friends, you don't really want to get, mixed business with friendship. So he was like, no, I don't want to buy it, but I know a man who does. Picked up the phone to me. I was like, absolutely, I'll be around there. So got in touch. By this point, it's direct to vendor because sale had fallen through with the agent. She's got a bit of a sour taste now because things have like not worked out. So she's now dealing with me direct. So I'm direct to her. Basically found out exactly, like you talk about a lot, Stephen, what's the pain point? What problem are we trying to solve here? She's obviously bought this property, this house. She's moved up the ladder. She's needing a quick sale. She doesn't want to go back on the market because she's scared about, time wasters and all the rest of it. I've already been vetted pretty much and recommended by my friend who said, this guy's totally legit. He's already got a portfolio of properties, which has obviously boosted my credibility. So by the time I step through that door, she knows that she can trust me and she's got that confidence. So, we had a conversation about price and basically she said that she would accept 65,000. And I was a bit like, wow, she's just had an offer accepted for 86 and she's willing to take 65. She's like, I just want to get out because I need to move on. And I says, well, that's fine by me. I'll give you the 65. So the home
You're not
report.
for more. First of all, negotiations, Nick, that's a starting point.
People will be listening to this and they're like, what? You're like, you didn't even negotiate lower? No, to be honest with you.
Let's face it, mate, it worked for your criteria, doesn't it?
Well, look, I'd spent a whole year trying to find a deal, right? I know what the market's like. I think 65 on an 80 grand home report in that area is actually a very good deal. I was quite happy to pay that. For me, it's not really about, see if I don't get all the money back out. It's not a buy, renovate, refinance, by the way. This
Right,
one.
which makes it even better, I think, because it's basically straight compliance and straight on the rental market, isn't it?
Yeah, it's ready to rent. And it'll rent for probably about 550.
If you leave a £2,000 in a deal, which you didn't do anything to, then surely that's a phenomenal deal because you've not had to go and carry out a 6-week flipping refurb.
Yeah. I mean, what are we say? Like, so what I was thinking was, right, I'll take out a 2-year, I'll buy it straight with a mortgage, right? I'll take out a 2-year deal. And then in this current market where we've just seen figures from Rightmove, things are going up like, 8%, in Scotland on average a year. So if I hold that for 2 years and it still continues to rise like that, then pretty much in 2 years' time, when I'm ready to refinance that, I'll pretty much get most of it out anyway.
Mm-hmm. Absolutely, aye. Because I mean, if that's going up, what, 95 grand, that's you all money out.
Pretty much. So,
yeah.
And me, like at my stage in life, I'm like, it'd be different if you were like starting right out and you only had 20 grand to get started, and you really need to recycle as much money out as possible. For me, I'm quite happy just buying something that's ready to let. If I can get that discount at the start, ties in a little bit of equity, hopefully build on that with a little bit of capital growth as well. And, I'll be sitting good. But obviously it does tie up a bit of cash, but I'm quite happy, that 4 or 5 year goal of getting 20 properties, then that might increase a little bit, but who cares?
What's the rental demand like and the rental income for this property?
Amazing. So like that'll rent out straight away with no work, $550 a month. Cathcart area, Glasgow, 1 bedroom tenement flat, really high in demand. To get something round there for 65 grand, if that, standard is is actually it's a great deal. So I need to watch though, Stephen, because it's not actually completed yet. So
No,
this is going to curse me, this, isn't it, doing this podcast?
my bad, mate. No, I think I love hearing stories like that as well, because people do have that kind of limiting belief that no one's going to sell you their property for 20 grand less than they can get for it, or all these stories, and it's isn't true at all. That woman had a pain point. She's looking to move up the property ladder. She's found her home. She's buying it. Somebody's mucked her about. She's now motivated by not getting an extra 20 grand for a flat. She just wants in and out. She could be mortgage free on that. So if she's still putting down a massive deposit on her next house, it's not affecting her hugely, is it?
No, I mean, I had actually got to the stage where I was going to just go out and buy a couple of flats just at home report value, full market value. But I was even struggling to get something at home report value. That was the problem. Do you know what I mean?
That's a good point, mate, because that's the kind of topic of the podcast is, the frustrations in a market. So if you'd done that and you'd bought something at home report, that could have affected your goals, because if you had tied up cash that you couldn't release in 2 years upon the refinancing, your pot's going to run out very quickly if you've done that a few times.
Yeah, 100%.
And you're relying on capital appreciation within your portfolio just to pull out equity to then go again, wouldn't you?
Yeah, but I've been thinking about this a lot lately. Do you know what I mean? And cash flow versus capital appreciation. I'm quite glad that I've got foundations of a good business here. I'm right at the start of building this letting agency business, but I'm really trying to grow it over the next couple of years. But obviously, cash flow has now become kind of less important to me as it was, 2-3 years ago, when I just basically quit my photography job and I was like, right, okay, I need to live now. I need to generate cash flow. So now I've been looking at capital growth figures over my portfolio, and I'm thinking to myself, wow, like when you look at it over a 10-year period, capital growth, if you buy in the right areas, will far outstrip, your cash flow figures. If you buy in the right areas. So
absolutely, yeah.
People,
it's interesting you say that, because myself and Sam, in the partnership we've got with the Aberdeen purchase that we're putting through at the moment, our goal is to buy a huge amount of properties we can in Aberdeen, because the stuff that we're buying, you're buying at 2001, 2002 prices, because the market's crashed that much. Now, our thought process was, buy 60, buy 100, the capital appreciation goes back up in the next 10 years, sell half, pay the day off another half, or sell the whole lot and cash in. And it's funny you say that, because I'm thinking the exact same stuff, where I'm not bothering about as much as cash flow as I used to before, making sure I was getting 250 or £300 a month cash flow. The stuff in Aberdeen, if you look at the real figures of it, the cash flow is terrible. You're 190 quid a month on a flat, but the thing is that I'm finding in Aberdeen that I've not found anywhere else that I've purchased is, usually when you get tenants, they're in for 3, 4, 5 years. Some of the tenants have been in for 9 years, but with Aberdeen, they're moving out every few months. Yeah. So you try and charge marketing fees and inventories and check-ins and check-outs, twice a year on a property. That cash flow goes to 100 quid a month. It's going to next to nothing on it. And obviously they're furnished as well, and they've got white goods. So it's a complete different strategy with stuff that's going up in Aberdeen, and it is more focused along the lines of the capital appreciation, which is something I haven't necessarily done before. Yeah, so it's interesting you say that.
Well, you guys, I mean, you guys, I think you've bought at a good time in Aberdeen. I mean, just looking at Aberdeen, and obviously I've done limited research on it, and it's through podcasts and speaking to guys like Chris Minchin and all the rest of it. But surely it can't go much lower, and you just think that if you're just to hold that for 10 years, I think with the investment in, I think renewables is going to be the key. Do you know what I mean? If Aberdeen can establish itself as a kind of leading city in energy renewables, then hopefully things will start coming back up. Do you know what I mean? I don't know if they'll start boosting like the rest of the country, but slow increases, maybe 2% a year or something like that.
No, absolutely, man. Hopefully the cash flow will go up, the rental incomes will go up before the capital appreciation goes up, so the business will look a little bit better. But yeah, no, definitely, it's just an interesting conversation that we've never really had before on more capital appreciation for the portfolio rather than just cash flow, because everyone is really focused on cash flow, building up that cash flow, getting that financial freedom, isn't it?
Yeah, and I saw a screenshot on your Instagram there recently. You were doing some, you had a mastermind call going, and you were doing a bit of kind of deal analysis. Maybe we should touch on that. Like this is super important at the moment. You know, if you are getting involved in closing dates and stuff like that, don't let your emotions get carried away with you. What sort of tips have you got for the listeners on that? Have you been?
I think I offered about 40 grand over over the asking price on this closing day. Actually, that it's actually happening in an hour's time,
Right.
and I think I'm 40 grand over the asking price on it. So,
Where is that?
this is in Falkirk. It's,
Falkirk. A
I
flip, right? A flip we're
flip,
talking about.
yeah. I could say it because by the time this podcast released, we'll have either missed out or we'll have got it. So
Everyone's like that on luckily it's not live. Everyone's on Rightmove going like, right, in Falkirk, where's all the opportunities?
So it's an area that I don't know that well at all, but there's a couple of guys in the mastermind group that's from Falkirk, and they said this house went on the market. It was offers over 325 grand in Arnott Hill in Falkirk, apparently the most prestigious area in Falkirk, the best bit, the ones where, you know, the houses almost touch £1 million and stuff like that. And
the only prestigious bit in Falkirk.
That was my thought process as well. I thought, people they can't get that kind of values, but I looked them up and I'm like, yeah, right enough. There's some selling for 800 grand recently. I'm like, all right. So went along and had a look at this view, and it was probably the best property I've ever viewed. It was stunning. It was beautiful. It was phenomenal. It was an interesting story as well, because you know what it's like. You start chatting to the neighbours, and the neighbours are all like walking the dogs, and there's a huge amount of interest in this property in this street. You know, 92 viewers and, you know, 40 notice interest already and stuff like that. But I think a lot of it's going to be quite dreamers, because you're needing a hell of a lot of money to do it. But all the neighbours were saying that it was apparently owned by someone who had a sweetie factory near Falkirk.
Right.
And it was basically part of the estate when the guy died 25, 30 years ago. And it was rented out. And the estate forgot about the property. And basically the person that's lived in it has been living in it rent-free for all these years.
Is that right?
And oh mate, it's a £750,000 house finished. It's phenomenal. And the roof soffits and gutter and facials were ripped down by the fire brigade about 5 years ago, so it's pretty much been exposed to the elements. But the person still continued to live in it until they were kicked out in January.
Yeah.
And now it's started to deteriorate. There's a bit of roof leaks and obviously a bit of water ingress and stuff. But the condition of the property, this old Victorian Edwardian period property, is stunning. It's phenomenal. So yeah, so basically, you can, if you know your numbers and you can appraise the property based on what your end value is, you can pay over the asking price. But there's a
let me stop you there, right? See, when you talk about end value in this current market, are you still being conservative, or are you like now saying to yourself, right, I'm going to need to pay over here? We need to just say, look, we're going to find our nearest comparable at the end, but we could probably make an extra, 10% on that.
Absolutely. Yeah, absolutely. I put in a conservative end value of 675 grand, even though I think that I would get 750,000. Yeah. So went really, really conservative, pushed up the refurb, and the profit was still working out at 160 grand.
Right.
So you can go into it. We can go into a few of us through the mastermind group. We'll do like a little joint venture in the mastermind group, like we'll do with Bridget and we've done with Kinross. So there's quite a few joint ventures taking place in the mastermind group. So this was the plan for this one. There's a few guys that are very interested in it. So offer went in this morning. That's going to closing day at noon today. And I think I went 40 grand over the asking price. But again, the numbers justify it.
So here's the number one question that you get from people, right? And you get this all the time. Property's going to a closing date. How much do you think I should pay? What's your response to that?
It's always about the end value. It's always about your criteria, how it works for you. Just make sure you factor in all your numbers, and you look at the profit margins. Put your profit especially when it's flips. Put your profit margin in there. Don't negotiate on that. If you want to make 50 grand from a property flip, put that in there as your profit, and then work back from what you need to pay for it.
Yeah,
you look at the end value, you look at your fees, you look at your renovation, you look at your profit margin, then you'll go, and bearing in mind things like holding fees for 6 months, mortgages, council tax, utilities, cost of borrowings, put all this cost against it, and that'll give you exactly what you can pay for it. And don't deviate from it. And that was kind of the point of the podcast as well, about being frustrated in a market and trying to add to your portfolio. Know exactly what the numbers work for you, and don't deviate from it. If you can only offer under the home port, offer under the home port. If you can offer a few grand over it, offer it if that's what it takes to get
it. Yeah. I remember calling up estate agents back in 2007, and like you're phoning around, and this was before I really knew what I was doing and stuff. And, like you're phoning around and estate agents are now just telling you, to stand a chance, you need to offer 15 things are going for 15 to 20% over the home report value now. So that's what you need to do. So this is where people are like asking this question. They think there's a number like 10% over or 20% over the home report value. You've got, you'll get the property. But, as I told you the other week there, I partnered up with a couple of guys. I think they listened to the podcast actually, and that's how they came across. I think you put me in touch actually to do a kind of partnership. I was going to be the investor. I had cash sitting there anyway. I thought I might as well put it into something. They'd found the property, in Paisley, 130,000 home report. I think I can't remember what the offer was in the end, but I think they went about 15 grand over or something like that. Which would have been 15% over home report value in Paisley. That's quite a lot, like West End of Glasgow, maybe not. You need to go 20 more. Things are going for normally about 20% over if you look at figures and stuff. But anyway, the story was it went for 185. So, there's no way you can answer why. I don't know the buyer's circumstances, but it sounds like they either got emotionally attached to it and they were going to use it as a home and they weren't bothered about getting any profit, or else it's going to be a builder who's basically going to put all his time in there to do the work on the cheap. Do you know what I mean?
I think what worries me the most about this current situation is the people that are paying 20 grand, 30 grand over for the house they're going to live in. I think that's what worries me the most, because once the bubble does pop, and they've overpaid over the home report, they're stuck in this house. I mean, just say, for instance, you're a young couple getting your first house together and you've just paid 20 grand over the asking price for a 2-bed house or a 2-bed flat, or a 3-bed house that's not quite suitable for a family. In a few years' time, when you go, all right, we're going to have a family and you need to move, you're stuck in this house for probably the next 10, 15 years before you're even breaking even or getting back out this hole again. And now, obviously, you touched on 2007, 2008. I remember purchasing a 3-bed house in Cowdenbeath. First I went from a flat to this house, and I overpaid. I think it was 7 or 8 grand over the asking price, but it was already an inflated price because you were already at the peak of the prices. And when we moved out of that house 4 or 5 years later, I had to rent that out and put it in my portfolio, which wasn't a great performing asset because I'd overpaid hugely for it at the time. I think the time it went through the kind of recession period, you'd been lucky. I think I paid 112.5 grand for it. You'd been lucky if I got 85, 90 for it for all these years. I had to wait until 2.5 years ago. I had to fully renovate it, and I sold it for 118 grand. So I just managed to clear. I didn't even clear my fee. I probably lost money on it. I made rental income for a good few years in it. But if we were bound to stick in that property and we couldn't move because we couldn't sell it without being in negative equity, we'd be stuck in that house probably even now if we were just working a job and wasn't building up a cash pot in property or adding to the portfolio. So I think that's the biggest thing that I see right now is what's going on is people are going to be stuck in, if they're not careful, they're going to be stuck in a house or somewhere for a long time to get out of it.
Yeah, one of the theories is as well, if things start, if inflation starts creeping in, talking to Adam Lawrence, like if we get this inflation, then one of the tools that the Bank of England use and stuff to combat that is, putting the interest rates up. So if interest rates start rising, then you've, bought, 40, 50K overvalue the property. And then you come to the end of your, fixed term mortgage after 2 to 5 years or whatever. And then the interest rates bump up, are people going to be able to afford to pay these mortgage payments? Do you know what I mean? So that's another theory as well. But anyway, so what can people do then, just to finish off, if you're experiencing this market and you think, and you're looking at everybody else on Instagram, you see everybody else doing deals, you're getting frustrated with this market, what can people do? Should they just sit in their money, put their cash in the bank? Should they go and invest in Bitcoin? Like what are we telling people here?
I think you stick to your guns. You understand what your goals are. You understand what you're wanting out of property, what you're in it for, and you stick to your guns. Exactly what you did. Like, you've sat tight, but you still put your content out there. You've still been on a podcast. You still put your social media out there. You still spoke about the market. You've still, you've used your social media to attract the right person to you. And then your investors' friends got back to you and says, "I've got someone that could buy this property." Now, if you weren't doing what you've been doing for the last year, would he have known that you were actively looking in the market and were an investor that was serious and would have reached out to you? Possibly not. So I think being out there, being visible, just keep building your network. Deals will come to you.
Do you think people need to be a bit more realistic in terms of, they're getting caught up with getting all their cash back out of deals and that? Do you think people just need to be a little bit more realistic and say, right, it's going to take me longer to get to that goal in this, market. Maybe I will need to kind of pay a little bit more or not get all my money back out. Is that a thing, a mindset thing that needs to change for people?
No, because I'm still one of the ones that was like,
I knew you were going to say that.
do the work, put in the effort, you'll find them. But yeah, I get what you're saying, and I suppose that's really personal, specific to each person, because it'll be dependent on their goals and their time frames. If they've got a shorter time frame but a bigger pot of cash, they can say, no, I need to, like you're saying, like I need to kind of be a bit more realistic with the market. I'll leave 5 or 10 grand in these deals, but I'll get there quicker, but I'll leave money in it, rather than if someone's starting out that's younger, no, stick to your guns, because it'll painfully affect, I'll probably affect your growth in a negative way if you overpay.
It is so difficult though, and social media for me is the killer, and it can really get you down. I mean, just today, like for example, I seen like Ross Harper posted.
I was going to say exactly the same example there.
That bastard, there he is again with another phenomenal deal, and he's just rubbing it in your face. I'm like, fuck off. But something to bear in mind, right? We've had Ross on. Ross has been in this game a long time, right? More than any of us here. Ross started out, I mean, we had him on the podcast, so go back and check out that episode, but he's been in the estate agency game for a long time, built up so many contacts. Mm-hmm. He's got a marketing funnel, probably spends like tens of thousands of pounds on marketing lead generation through Google Ads or Facebook and all that. I don't know exactly, but I'm presuming he's got multiple websites set up to bring him all these leads as well. He's got an auction company set up. So you can't compare yourself with somebody like that, and don't get down on it.
Mate, I got the screenshot of the exact same thing you were talking about, Ross's post this morning from Sam Dyer. And it was basically saying the exact same thing. Fucking hell, like, look at this deal. Like, fucking hell, he's doing this. And my response was exactly the same. Stick in your own fucking lane, put your blinkers on, do what you do and what you're capable of, and at your level. Don't look at someone else that's been in the game for 10 years longer than you have and expect that you're going to get the same results. You're not going to. He's got a bigger network, more connections, a more funnel off this stuff. So I just
more money,
more money,
cash. Well, that's a good one to end on. I think we've covered it well here. If anybody wants to join in this conversation, then post up in the Facebook group. We've got 2,000 members.
Yeah, brilliant. We had 2,000 members last week. Brilliant.
We should do a wee event. Actually, that's what we should do. We should do a wee Q&A event, a wee special, just to thank the listeners. Maybe we can sort that out. And yeah, just tag us on Instagram, screenshot us, and we'll share it out to our followers as well.
Yep. Brilliant, guys. Thanks for listening. Hope you enjoyed it.
Cheers. See you next week.